Hi, everyone. Thanks a million for joining us this morning. You're all very welcome to ITI's Accelerate Artist Support Programme. We are delighted, actually, to see such a large gathering for the session. This and other sessions that we'll be running out over the coming months are made possible through funding from Rethink Ireland under the Innovate Together programme. And we're extremely grateful to them for this support and to the Arts Council. A question we get asked time and time again by independent artists and collectives is, do I need to set up a company? What is a company? Can I get funding without being a company? And in order to address the queries we get in this regard, we've invited Claire O'Neill to give the benefit of her knowledge and experience in this area. At the end of the session, or towards the end of the session, Claire will leave room for some questions, but she or we may not be able to answer absolutely everything this morning, as there isn't necessarily a one-size-fits-all solution to the question, but we can undertake to follow up on any specific queries at a later date. So let me tell you a little bit about Claire, a friend and colleague of ours. She's general manager of THISISPOPBABY and has a wide ranging arts management experience, having worked with Rough Magic Theatre Company, Irish Theatre Institute, and as general manager of Project Arts Centre. She has an MA in Drama and Theatre Studies from UCD and a postgraduate diploma in Business and Management from the London School of Economics. But she's absolutely passionate about supporting artists and combines her business nous with her artistic and artist support. So I think that you'll find her delivery is one which is very approachable and probably somewhat informal rather than a kind of a tutorial as such. So have a listen. And if there's anything specific that you need to follow up on, just contact Leigh and we'll deal with that offline. Okay, thanks a million, everybody. Claire, over to you.
Thanks very much, Jane. Thanks for that lovely introduction. It's great to be asked to do this morning. And as Jane said, there are a lot of you that are really interested in setting up a company, which is interesting because I think very often artists sometimes, when they are getting ready to do a show or maybe they have an idea for a fringe, they assume immediately that they have to have a very big infrastructure around them. Similarly, when applying for grants, you often can assume you need a lot around you before you can do that. And that's not necessarily the case. It isn't one size fits all. And I'm going to talk through a few different ways that you can operate from a business point of view and as an individual, because what you guys are all trying to do is to organize yourselves the best way to achieve your artistic aims. And I imagine everybody on this call is really clear about what they want to do in a rehearsal room or with their work in that way. And I'm here to demystify what you need to do behind the scenes to make that work. You know, the concept of an organization and a business organization has evolved, but we've been organizing ourselves to do stuff together socially since the beginning of time, you know? And I think once people hear the word business and commercial, they start thinking, oh, we're trading, we have to be trading for profit. How do we do that? And that's not necessarily the case. Lots of arts organizations are set up as not-for-profits, others aren't. And I'll come back to more on that later. But just to get a few really, really simple definitions out of the way without getting too theoretical, first of all, a company, as in a legal entity, it's a legal entity that's formed by individuals. Its owners are shareholders. And any definition you find would say it's mainly with the purpose of making a profit. Okay, so let's park that for 1 minute and we'll talk through things in a more art-specific way. I'm going to start with sole traders because I know questions came in about that. And it is many of you are probably already set up as sole traders or you're working with people who are set up as sole traders. And essentially, once you start working for yourself, you're regarded as self-employed, okay? You can be regarded as self-employed as a sole trader, through a partnership, or through a limited company. Forget about partners and companies for a minute. Let's just stick with sole traders, okay? And I'll try not to have you all like a glaze over and wish you were having something stronger than coffee at 11 o'clock in the morning, okay? So sole trader, simplest form of business in Ireland. It refers to one individual who operates a business, although you can have employees. You have to register to have an employee number to do that. Wouldn't necessarily be recommending that in an artistic way it's not really advisable. It would be very common for, say, small tradesmen and stuff like that, who might be employing somebody they know to do a week here or there. But by and large, if you're setting yourself up as a sole trader, you're looking after your own affairs. In looking after your own affairs, that means all the risk and reward is on you. You have no, there's no limit on your liability. If you start to incur debts while operating in this way, they're on you to figure out, okay, and to sort out. You're legally responsible for all the aspects of this business. As a result, the main things you have to do is register as self-employed with revenue and pay tax, PRSI and USC. And I'm going to say tax, PRSI and USC so many times over the course of the next hour. You have to pay them. It doesn't matter what you're doing. We'll talk about the artist tax exemption, but you'll find you still have to pay USC and PRSI, even with the artist tax exemption. So anyway, you want to set yourself up as a sole trader. Is everybody familiar with their My Account services? Everything to do with revenue is online. For companies, for individuals, I think everybody is up to speed on that at this stage, but My Account is key. So you can register through My Account very easily. You are now set up as a sole trader. You don't have to do anything particular to say you're an artist that's a sole trader. You've just set up in that way. Anything you earn then is subject to your personal income tax, and the rates are between 20 and 40%, depending on what you do. And like I said, plus your USC and your PRSI. You're a self-employed individual, and so that means you are locked into this date of the 31st of October, which I'm sure you've heard people talking about in terms of doing your tax returns. So you have to file a return on the 31st of October, and that you're making a self-assessment. So you're basically paying balance of tax for the previous year and a forecast on what you are going to pay for the year that you're in. The vast majority of people will use an accountant to do this. A few people, you can do it yourself. You can, and there are tax websites and stuff like that, but the vast majority of people will use an accountant. The reason for this is you're going to earn money, but you're also going to have expenses as a sole trader. And there is a deduction to do there. Irrelevant business expenses can be deducted and included in your accounts. And we won't go down that rabbit hole too much because it's very detailed, but the main headlines here are you must keep your own accounts, which is a record of purchase and sales of all goods and services you provided and any money that has come in and out. So you have to invoice for things. There's key information in your invoice that you have to have, like your PPS number, your address, and details of the job you've done and dates that it took place. And your PPS, once you've registered as a sole trader, your PPS number becomes your tax registration number. That number is the one that will follow you all the way through the system. The other thing is if you're setting up as a sole trader, you are really best advised to set up a separate bank account for all of this and then pay yourself out of that bank account into your own personal bank account. It's just much cleaner and easier. And in terms of, I know some people are going, oh my God, keeping accounts and records. It doesn't have to be a monumental task. If you give yourself 10 minutes every week, you can put your invoices in one tab on an Excel spreadsheet and any relevant expenses you have. Photocopy those receipts, you'll lose them. Photocopy them and to write a note of what you spent them on because you won't remember in September when you're frantically going, why did I spend €4 on the 10th of January and why do I think I don't have to pay tax on that? So that's the main bit of being a sole trader. I'm going to talk a little bit about VAT. Stay with me. I know. If your turnover, right, for the supply of goods or services exceeds a certain amount, then you must register for VAT. That's value added tax, and you have to charge that. Now, the distinction here is the supply of goods, the threshold is higher. The supply of service is 37,500. So there's a decision to be made because by adding VAT, you are making yourself more expensive in a theatre context because in most cases, VAT can't be reclaimed. And I'm really going to slow down here now because we're getting into very specific things, but it is just something to consider in terms of what you are expecting to earn as a sole trader and how you're managing things and if you're going to go over that 37,500. And in some cases, if you're getting very close to it, but you're not going to earn a huge amount beyond that, VAT isn't necessarily, you don't want to be charging VAT and maybe making yourself more expensive. But that's VAT is a very specific thing in its own right. The other thing you can do as a sole trader is if you want to use a business name, you can register a business name with the CRO. That's the company's registration office, and you'll get a certificate for that. And generally, if you want to use this business name, you need the cert before you can set up the bank account. They're all connected. I think very often people don't realize that. They assume in registering a business name, you're going the whole road of setting up a full company, but that's not the case. There's a separate register of business names and a separate register in terms of actually fully set up established companies. Being a sole trader, in spite of everything I've said, if I've freaked you out, is actually relatively straightforward. The main thing to remember is if the business fails, your assets could be potentially used to pay creditors. The main difference between a sole trader and a limited company is a sole trader is owned and controlled by one person. You have an unlimited personal liability, whereas a business that is set up as a limited company has an ownership, and that is split into equal shares. I'm wondering, I'm going to keep going at this point. Isn't that right, Leigh? I'm not going to take questions at this stage because we might go down a rabbit hole. I'm going to talk a little bit about the artist tax exemption now, because that came in the questions in advance. And the thing with the artist tax exemption, so income earned by writers, composers, visual artists, sculptors from the sale of their works is exempt from tax in Ireland in circumstances. The certain circumstances is key there. The earnings are exempt from income tax in the year in which you're making the claim, but you do have to go through a process with revenue in terms of having your work assessed to see if you're actually eligible for the artist tax exemption. So it's quite possible that you might apply to revenue, go through the process and get the artist tax exemption on parts of your creative work, on a book, on a play, but then you might also be earning, say you're earning and you're also directing work, or you're facilitating workshops, or you're teaching drama or doing something like that. So there will be a split in terms of how you're managing your income and what is tax exempt and what isn't tax exempt. And this is where it's key when it comes to actually doing your taxes, that you have an accountant and somebody who is working with you who understands how all of that is working. In terms of, there are limits in theatre in that, and I know this conversation comes up on occasion, but directing a piece is not, you cannot apply to be a tax exempt as a director. If you're submitting something to revenue in terms of a play, it's original creative work. It needs to be considered unique, creative. They are looking for, in the submission for the play, to usually be published or to be in its completed form with a production contract. You know, so you're very, very far down the line of creation and having the work there that revenue can tangibly assess before they grant the artist tax exemption to you. But if you do have it, and there are certain grants from the Arts Council, such as an Arts Council bursary that goes directly to an artist, then you're exempt from tax in receipt of that, you know. The exemption is only to tax. You're still paying your USC. You're still paying your PRSI. Okay. So that's sole trader and the artist tax exemption. When people are looking around at the scene in terms of who's producing work and how they're producing work, I think a lot of people, like I said, assume there's full companies in place. Very often there's partnerships in place. Broken Talkers have themselves set up as a partnership. Malaprop have themselves set up as a partnership. And I should say, actually, in terms of, as I talk about partners and companies as we go forward, one of the key things is once you set up either a business partnership or a company limited by guarantee or with shares and so on, one of the express reasons the company's office has a register is to make that information public. So it is possible for you to go onto the CRO and search for all of the names of the various companies, and you can see straight away what formation that they're set up underneath. Partnership is quite common. Partnership is when two or more people agree to run a business in partnership with one another. You need a partnership agreement in order to do that, and that needs to be drawn up by a solicitor. There's no way of getting out of that. You are not going to do this on the back of an envelope after a show. You really need to have that set up properly. If the business fails, the partners are jointly responsible for the debt. Partnership is two or more people now. It doesn't just have to be two people. So all members of the partnership are personally liable for the debts of the company. It's quite common at a certain stage for theatre companies because it doesn't bring with it everything you're going to need to put in place for setting up a limited company. You can operate for quite a long time in terms of receiving project grants. Dublin City Council grants, various other pieces of revenue. And it reflects a good way of working when your operation is kind of flowing like this, as in you're not saying I'm heading into 3 years of back-to-back work, production, things to do, but you're going, okay, we have a show maybe in a festival in the summer, and then we're going to do a fringe, and then all of us are going off to do some other bits of work that earn us some money, or we're on different projects, and then we're going to come back together next spring and we're working on a new piece. It has benefits in that way. It's not suitable once you start to scale up the work because of that very fact that you guys are individually on the hook if anything goes wrong financially with anything to do with that. But like I said, you will find a lot of company names that you would think of. You will find that they're set up as partners. Okay. Then we get to a limited company. So the limited company, that's a big jump in terms of your activity. A limited company, you're setting up the business as a separate legal entity. That's the real difference between sole traders and partnerships in terms of your liability. If the company acquires debt, the creditors usually only have claim over the assets of the business. And you'll find in the instance of theatre companies, we're not sitting on loads of assets. We don't own machinery. We don't own buildings. We don't have things like that could be claimed should there be debts. Equally, it's tricky to run up debts because the bank is not going to give you an overdraft or credit cards or anything like that on the basis of being in receipt of funding. You still have to manage it as incredibly carefully as you always have to do. But what it does do is if you set up a limited company, and that is, say for the purposes of this, you have two directors, they're setting it themselves up. You're setting up a legal arrangement between the two of you. That's a one-page document. That's a constitution that you set up. And in that, you set out a share value on the company. You put a nominal value on that share value. Say for purposes of this, €5 each. So the value is 10. That means your liability is limited to a €5 each. If anything happens, if the company incurs debt, nobody can come after you for anything more than that. And that is a really key thing that you have to do once you reach a certain level of activity. And I think in the case of THISISPOPBABY, for example, they had been operating as a partnership before this, and Riot was a really key show for them. And actually, the trajectory of Riot and the offers in terms of tours and stuff made the requirement to set up a company really quite urgent. And key to that was was limiting the liability for those involved, because you're not going to take off on a world tour or engage in that much activity. It's just not prudent to leave yourself exposed and continue working under a partnership arrangement if you've got that much work going on. For everybody who's on the call at the moment, setting up a limited company is a big step. And I would say nobody should be undertaking it purely for the accountancy fees alone, which I'll talk about a little more, unless you are going, we've a really big body of work that's going to go on over a number of years. And the number of years is key there. And this is the best way for us to move things forward. Because once you set up as a limited company, it brings with you a number of obligations, and most of them particularly around finance and accounting. Once you're set up with a limited company, you're registered with the Companies Register, the CRO, you've been issued with your company number, which is going to be different to your tax number. You are now in a system where you have to file accounts with the Companies Office every year, no matter what. The directors have to sign, even if you do nothing for the year, the directors have to sign off on accounts and do that. And so you're into a process where you're incurring annual accountancy fees no matter what you do. You're not doing a full audit. Companies don't have to do that, but you do have to produce financial statements. And you may find yourself in a situation where you have a grant from the Arts Council that requires a full audit. So you'll audit that, but you will still have to pay your fees to do your annual account as well. So that's one that I find trips people up sometimes, that you will have obligations once you set up as a company, both in terms of your reporting to the Arts Council or other funders or stakeholders, and your reporting to the company's registration office. If you're still in partnership or sole trader, you're looking after your affairs yourself, you're doing your tax return in October. there isn't a separate entity that has to have all of this due diligence done on it. So that's a limited company, okay? It has share capital, you've put a nominal value on the share capital, you've limited your liability to do it that way. The other thing you might have, and this is very common in the arts, is a CLG. So that's a company limited by guarantee, and that's very often sports clubs, charities. There's no share capital right there on that, but the members of the company will have had an arrangement in place that says they're contributing €1 towards the winding up costs of the company. So again, they're not incurring a personal liability if anything goes wrong. That's the structure in place. The CLG has a lot of things that you need to fulfill in terms of a constitution document. That's not a one-pager in this instance. It's longer. There's a memo and articles of association. You are going to set out what you're doing in the memo and articles of association. You are setting yourself up as usually a theatre company set up as a CLG is set up as a not-for-profit, and you can continue operating as a you can be as a not-for-profit. Sorry, I've lost my train for a second. Not-for-profit, or you can be a not-for-profit and you can also go for charity status. I know questions came in about setting up as a charity status. And the reason a charity status or not-for-profit might be suitable, and is often very suitable for some theatre and arts activity, is to do with your eligibility to apply for funding. If you start looking around the Ireland Fund websites or on the various, through the wheel and various places where grant funding is available, you will often see that just a limited company is not eligible to do that. You need to be set up in a certain way to apply for grant funding. So if you're thinking of going down this route and you perhaps know that you are going to do maybe a lot of community work or a lot of work in a certain area that would make you will be very possible for you to access certain types of charitable funding outside of the Arts Council and local council grants, then you really need to get into the detail about whether setting up as a CLG and going for charitable status is the right move for you. Charitable status is very specific. If you're setting up, arts organisations usually can get it on the basis that they're involved in work that's for the advancement of education. And again, if you do so, you're setting yourself up. You have another body, a regulatory body in your world. That's the charities regulator. You will have different requirements, more stringent requirements around how you audit your accounts and who you report to. So you'll be returning things to the company's registration office, but you're also doing a report for the charities regulator, as well as all of your reporting for your stakeholders and your other funders. There are other company types in terms of DACs and specific purposes and things like that, but it's not really relevant at the moment for the sector or necessary for us to have that. They would be very specific to things like construction and meat processing, banks. They have a whole set of other structures around it. The other thing to say about setting up a limited company, it's a big step to take. There's also a lot of steps involved in winding it down. If you decide to close down a company, there is a whole process you have to go through in terms of closing out the company, final statements, financial statements, registering to strike off. It's quite a tangle. So that's just something to bear in mind. But once you've done it, you've locked yourself into your requirements around your reports and your accounting and things like that. So you can't just turn around and say, we're going to close it down quite quickly. You could find yourself in a very long process that can go on for months in terms of what you need to do to close it down. One of the things I want to say, sometimes I feel when I talk about this stuff, it feels like you're talking about catastrophe all the time because you're talking about limited liability. It's very important to say that like 98% of the time, everything goes as planned. You aren't incurring, people aren't incurring debts or running around or doing things. Stuff doesn't happen that's really bad. But the structure you're putting in place is to make sure that if anything happens, you have the right framework in place to deal with that, and nobody is going to get caught out financially or in any other way in terms of how they have organised themselves. It's an awful lot when individual artists find themselves with a project grant that might be suddenly landing in their own personal bank account and trying to figure out what you have to do and how you manage it. At this point, I'm just going to talk a little bit about the company name. If somebody decides to go and register a company name, you can do that with the CRO. The things to bear in mind just on it is that you can't obviously pick a name that's already registered, and you can't pick something that's too similar. They can reject an application if they think it's too similar. You can't put anything that's offensive. You can't put on things that suggest you state sponsorship, and you can't use certain words such as bank, insurance, co-op. Actually, you can't use you can't just throw that in. They have to be approved by certain bodies. The other thing in terms of setting yourself as a company, whether you're a CLG or a limited company, you have an obligation in terms of having letterhead. And there was a time letterhead was something you absolutely had to go and have physically printed in terms of official letters. Of course, now we can have all of this on a PDF, but you do need to have a letterhead. It must show full for any official correspondence, not for invoices and things like that. But you do need to have your full company name, the name of the director, the place of registration. I know this question comes up. You would need to have an official registered address if you're setting up a business, and that can be your house, but that remains the official address. The CRO number, your VAT number, if you have applied for a VAT number and you're operating in that way, and the place of registration. So that's just something to bear in mind. And it's also something that should appear in some sort of footer on your website or some easily accessible contact us, get in touch tab. That information, it doesn't have to be up huge, but somewhere along the line, that information is supposed to be easily accessible on your website. The order, just in terms of a company name, and a company name can be different from a trading name, but the company name is as per the register with the CRO. It's on your certificate of incorporation, and that cert is what you're using when you're going to set up the company bank account. So I think very often people think they get or try to get the bank account before they might have gone to get the company name. And you can't do that. You need to have actually started the process with the CRO in terms of the cert of incorporation to get the bank account. I'm going to talk a little bit now about tax. Not too much, but just in terms of, because that's given you an overview of the different structures. But just to talk very briefly about tax and some of your obligations if you are employing people. If you are registering for your tax as a partnership, you or your tax agent, that would often be an accountant, must inform revenue that you are registering for tax, you're registering as a partnership, and the gateway to all of this is through the Revenue's online website. If you don't have a tax agent, you can do that yourself. There's a TR1 form that you can do, and this is how you're registering the partnership for income tax, PAYE, and things like that. If you are registering as a company, you must have a CRO number, and again, you're going through Revenue, through Ross, and again, yourself, you can submit the form yourself, or you can get somebody to do this for you. The thing is, if you're going as far in the same way as was you're setting up a partnership, you're getting a solicitor to organize the partnership arrangement. If you're setting up a company, you're paying somebody, it's about 250 quid to do that. There are lots of places that do it, that will set you up as a company. You're already far enough down the path that you're going, we have a lot of work happening for the next 3 or 4 years. We need to set up a company. You're working into the budget, the costs of actually all of this stuff that I'm talking about with the CRO. It's not really advisable to undertake it yourself, or indeed necessary. You're going to put yourself under a lot of pressure. You want somebody who really knows what they're doing to set up this process with you. But once the company is registered with Revenue, you're going to get your tax reference number, which you need that to file all your tax returns, and you must file all payments and all returns through Revenue, even if they're nil. And this is the one that catches people out. They're like, oh, we can have a company, we can go dormant for a while. And you're like, yeah, you can, you mightn't be doing anything, but you'll still find yourself in a position where Revenue is going, where are your returns, even if they're zero? And Revenue want to see a zero return for things. If you stop filing returns, you will flag on the system. If you file zero returns, Revenue just goes, okay, nothing is happening. A zero has landed in, and it doesn't trigger anything on their end of things. So that's where you are with tax. Setting yourself up as a partnership or as a company, and you decide you want to take people on. You want to employ people to do a show. or present a piece. And this is where you're getting into obligations, right? There are lots of obligations around employing people in Ireland. And you have to fulfill employment rights. And there's two different ways of employing people. You can employ people under a contract of services. So that's an employee of a company. Or you can employ people as a contract for services. Now, most of you guys are probably familiar with the second one, because you've probably, if you're a sole trader, you are being employed like that. There isn't the same amount of employment legislation attached to being engaged like that, because you're saying, hey, I'm a sole trader, you're paying me a fee, I'm looking after all of my tax, my affairs, you don't have to do anything like that for me. So it's slightly different. And usually in a theatre context, it's for a period for a production. So it's for 6 weeks or 8 weeks, depending on the length of the show. And that is a very typical way. And even companies that are like, if you're going to think of bigger companies, you think even of the Abbey, the Abbey has a big cohort of staff employed. There are still points where they go, okay, we're taking on this number of people on contract for a very particular show. The main thing in terms of employing people is you're responsible. If you're employing somebody and you're employing them as a PAYE employee through your partnership or through your company, you are then responsible for their tax. It's really important. You have to deduct, you have offered them a wage, you have to deduct PAYE, PRSI, USC from that. You have to return that to revenue. That's now every month. You used to be able to do that quarterly. It's not the case. You have to return that to revenue. And that is a key obligation in terms of, from a company management point of view. Just bear with me for one moment now. And I have, because I have a different set of notes here. There we go. So you have to record all of that PAYE. You have to do that through a computer. You can do it through a payroll package. You can design the system yourself if you want to really torture yourself and put it all on an Excel spreadsheet. You can do that. Revenue can ask to inspect those records at any time if you're set up in that way. They can, I remember being in ITI a day, they turned up at the door and just said, can we see you're running payroll and that you're actually doing everything you're supposed to do? And you must keep all of those records for 6 years. And you have to pay that tax. So if you in real time, as in it's rolling through a return every month to revenue, you've probably heard in the papers a lot in the past year, there was talk of warehousing things, and that's where revenue was saying to employers, in the interest of keeping you going, you can not pay all of your tax that's due right now at this minute, and we'll apportion it out. But normally that has to happen. It has to happen in real time, and it has to go in every month. So that's your obligation in terms of employing people through the PAYE system. Separately, if you take on somebody and you have an employee, you have to keep employment records. You have various different obligations around data and CVs. It's not the case anymore that you can have a stack of CVs in a filing cabinet in the corner with people's personal information. GDPR has put an end to that. But you do have to keep certain information for people about their bank details and their address and stuff like that on file in order to pay them. There's just detail to be worked out there in terms of how you're managing that. You have to, I won't get into too much detail here because there's a lot, but you have to make them an offer. They don't have to have a contract immediately, but they do need to have an offer within the first 5 days that says very clearly what the core terms are, including the names of address of employer and employee, the expected duration of the contract, the rate of pay, and what the reasonable amount of working hours are. Within that, you do need to make sure if you're employing people that they're getting rest, that working time is being observed. This goes for employees through PAYE or your contractors. Say, for example, if you're running a get-in and stuff like that, like you can't you have to manage the hours that people are working so that people are getting sufficient rest in between periods. And you'd hear production managers talk about that, particularly when they're trying to run really, really intense get-ins, how they manage their schedule, how they manage the crew, how they make sure everybody is getting home to have enough rest before they come in, or they're staggering people, things like that. And you do have obligations around annual leave and public holidays. Now, very often in a theatre context, this doesn't really come up, because if somebody's on for four years, somebody's on for a 4-year contract, they do get their holidays. They're on for 4 weeks or 6 weeks. It's different. You haven't accumulated that. Some of you are probably familiar from the Arts Council project grants, where they're asking you, are you employing somebody by PAYE? And you say yes, and they're like, great, and it automatically calculates then PRSI, and then has another box where it says holiday pay. And that's basically an acknowledgement that these people are working for you as PAYE for the 6 weeks, but within that time, because you're in a full production schedule, nobody's heading off for a week's holiday, but they've accumulated that leave, so you need to pay them for the paid holiday they've accumulated over the time. That is one of the key differences between PAYE and contract, and if somebody's just employed as a contractor, they're not accumulating leave in the same way. The other thing then is, in terms of employing people, you have obligations under health and safety. And I think when we're in active production, people are very good here in terms of understanding health and safety, because it comes at you from various different ways. Your production manager will be looking after it. The venue you're going into will be looking after it. But it is important to say that if you are employing somebody and they're in an office, that brings with it another layer of requirements around health and safety. The other thing is, if you're employing anybody on a long-term basis, you have to have procedures in place. If you get into anything around needing to let somebody go, that procedure needs to be in place. Discipline, typically it's best practice to have an employee contract. Clearly it's best practice to have a contract. You have to have a contract. A handbook as well that explains in more details how things are going to run in your organization outside of the contract. They're kind of the main headlines on employing people and how that would work. I'm kind of mindful of the time at this point. I just want to touch on one or two things very quickly, and then we might move to questions. And that is, I know a question came in around trademarks and copyright and things like that. And I think, again, to go back to the very beginning, very often, say if you're sitting down and you're looking through the Fringe brochure and you're like, oh my God, there's this company, there's that company, there's the other company. I can tell you now, many people setting up, putting on work are not necessarily incorporated or set up as full companies. And with that, in the theatre world, it would be very unusual for anybody to have copyrighted or trademark logos or branding or stuff that you would see. We do have an intellectual property office in the country. They're in charge of IP, and that includes patents, designs, trademarks, and copyright. But I can't think of anybody that I've ever worked with that has gone as far. Maybe Jane will be able to correct me. But it's just more so to say you're not obliged to do that. That's not, if you're thinking of your branding and you want to look after the marketing aspect of it, you're not running to incur costs around trademarking, stuff like that. If you're going to set up as like the 7 Up theatre company, you might find them coming after you if they find you somewhere on social media and ripping off logos and stuff like that. That's a different thing, but it's not a requirement. And then the very last thing to touch on, and please don't come out in hives, but that is insurance. You will have obligations around insurance. You don't have to have insurance year round if you've set up as a partnership or a business in this country. That's unusual. It's different to the UK. Like once you set up as a business in the UK, you have to have your employer's liability insurance year round. That's not necessarily the case in Ireland. And as you are probably familiar, if you're doing work in the Fringe and that, very often groups are doing event-to-event insurance, but you need to have insurance. If you're moving into production mode, whether you're doing it for 6 weeks or a longer stint, once you get to the point that you've engaged people under a contract, you need to have your insurance in place. And to be honest, most of the rehearsal venues and the venues you'll be going into will be turning around as part of their contract and saying, do you have your employer's liability insurance in place? Do you have your public liability insurance in place? And that's just a cost. And you'll see it in your Arts Council templates and stuff like that. The Arts Council expects for you to have a cost in for insurance. Unfortunately, it's a cost that only seems to be increasing. And unfortunately, it's something that seems to be getting trickier in some of the events and performance areas, depending on what you're doing, to get certain things covered for you. And anything you'll get now will come with a great big disclaimer saying that they won't cover anything to do with COVID, unsurprisingly, in terms of the risks associated with that. But you're putting insurance in place, again, heaven forbid, but in the instance that something happens and some sort of injury takes, somebody has an accident at work, that there is an injury, that you have a policy in place there that protects and can pay out if there's costs that come up there. And you'll be looking at, again, there's limits on that in terms of, as with any insurance policy, if things are under, if this is a very small amount of money, your insurance policy is not going to cover it. And it's not indeed a good idea for you to try and raise a claim for that. The thing about that, in order for everything to work for your insurance, is you need to have processes in place around, if there's an incident, reporting an incident, taking note of an incident. Production managers tend to be super good on this because it's very important when they're running a safe get-in, so that you have all of those steps so that you can turn around to say to the insurance place, your insurer, this happened. Oh my goodness, somebody has unfortunately had an accident and we need to cover these costs. You need to have that tidy, because the insurance company, if you don't, it can create any ambiguity you have there, will make it easier for them to turn around and say, I'm not sure if we're covering that. But again, to point out that that's the preparation for the 2% of the time. 98% of the time, you're going to run everything. It's going to go really well. You're going to sell all the tickets, and you're not going to ever need to look at your insurance policy beyond getting it and making sure it's on file, and that you have given a copy of it. Oh my gosh, have I stopped talking? You've given a copy of it to the venue. Sorry, my Zoom flashed for a second and it looked like I had stopped talking, but I'm sure you probably all want me to stop talking at this stage. How are we doing for questions, Leigh?
There's a good few in. I'm just going to take a quick look through the insurance ones, as that's just what we just covered, just to see, was there anything that anyone asked that maybe hasn't been looked at yet. I think, what are the obligations around insurance for employees under a contract for services? Would a company expect a sole trader or contractor to have their own? No,
this is a really interesting one, because if you look at, and I've dealt with this in a few different ways, very often if you're set up as a contractor in another sector, you have decided as part of your overall business expenses that you're taking out professional indemnity insurance. Now, there's not a phrase that'd be very common in the arts world, but in other sectors, it is quite common. What you are doing is, as a sole trader, most people I know do not have their own personal insurance taken out. However, if I'm putting on an event and I'm getting an insurance policy for the event, I am always asking my insurer to make sure that they are covering my employees and my contractors. And most policies would say that. And then what needs to be super clear then is you need to make sure that you actually have your contract in place with whoever is coming in to do lights or production manager or stuff like that. That can trip people up sometimes. Sometimes people are like, it's fine, and we have a policy and I have an email with so-and-so and they're going to do the get-in for me. And you're like, yeah, but you actually have no contract with this person. You haven't laid out that you are engaged them. You haven't laid out the terms of engagement. You haven't laid out the fee. You haven't laid out the dates. You haven't said the place at which they work. Place at which work is happening is a really key thing for insurance. If you're having an event in any way, shape or form, they're going to want you to say, we're rehearsing in the lab. These are the dates. These are sometimes the times that we're rehearsing. So they're really clear on what we're covering. Then on this date, we're moving to project to do a get-in. And then from this date, this is when we actually have public in the performance in the theatre. And you need to set that all out. And because there's implications, like you can get insurance to cover you for going in for 4 weeks of rehearsal and development and have no public involved outside of your group in the room. And that isn't going to cost you as much as if you're saying we're going in, we're doing 6 weeks of rehearsal, a week of tech, and then like a 4-week run, in project. So that's one, but it's one that needs to be clarified at the point of engagement or going on to a gig. And it is something that can get caught out, particularly if you get a policy and it says your employees are covered and it doesn't say and subcontractors and stuff like that within it. So it is an interesting one, because in many other sectors, freelancers would have taken out their own insurance. It's not something that I'm aware is very common here at all. So that's that. Okay.
And then returning to some of the company name and registering that, can you register a company name as a sole trader?
You can register a company name as a sole trader or business name. I'll have to double check on that, but you can as a sole trader. Yes, you can. And that doesn't bring you through the whole process. I will come back and clarify for that person whether you're doing it through the CRO. Do I have a note of that there? But it is possible.
And then somebody else, I think, has registered their company name with the CRO, and they themselves are registered as a sole trader and are wondering if it's okay to hire people for a production as a sole trader, or in that instance, should they be setting themselves up as a partnership?
I mean, it depends on the length of the contract and what you're doing. Like I said, you can hire somebody as a sole trader. I don't think it's a great way to be doing it, particularly because again, once you hire somebody as a sole trader, then you're into, depending on if you're going to hire them as an employee, you're into your obligations around paying the PAYE and getting that back to revenue. If you're going to hire them as a contract for services, you can, and I feel this is a tricky one to answer, because I think artists are being put in a position where they don't necessarily always have access to the best way to deliver the work when they have a contract like that. But it is, like I said, it is possible to engage somebody if you are a sole trader and pay them. In that particular instance, I'd need to know a bit more about the scale of money, time, et cetera, involved to do it. It's very common in family businesses that a family member is engaged like that. And like I said, it's very uncommon for very short hop things in construction and stuff like that.
If there are ones, though, that are a bit more detailed, we will get in touch with people and maybe follow up with a bit more detail. Following on then from that, for a partnership, does a partnership have to file tax return on income as a partnership and not employers?
Yes, you're going to have to look at that. You essentially will have your individual income. Make sure I'm getting the order of this right. Like if you've been paid out of the partnership, but the money that's there, you have to assess the money that's there at the end of the year and the expenses, and look after your taxes that way. Let me double check something on that now. You see, there's a few different things. You will have your own income tax, just to get the orders right, that will be paid. So you have to do that. That's for the 31st. But the partnership might also have PAYE to have that it will be doing on a monthly basis. The partnership might also have VAT that it's being looked after. And the partnership might also have, there's another thing called relevant contracts tax, which doesn't really come into place. So there's a few different levels to that. Am I clear on that? You're not in the company annual return as a partner. So you're not doing that. You're still paying income tax. But if you've employed people, you will have other obligations around their tax. Does that make sense?
So Kieran, I think that was yours. Does that cover it for you?
Yeah, so the partnership, it doesn't have an income as such. Each of the individual partners have their income, which is accessible.
No, the partnership, the income is coming into the partnership, first of all. Then it is going out, however you've decided to do that, as your income to the two individuals. They have to pay their tax, their PRSI, their USC on that. and the partnership could still have some money left in terms of at the end of the year, in terms of how it operates the business. Does that make sense? So it comes into the partnership together and then goes out to the partners as their wages.
Right, yeah, but the partnership as an entity doesn't pay corporation tax.
No, because it's not set. Yeah, it's not set up in that way. It's essentially. I mean, you could, in the most simplified way, I say you're saying we are a number of sole traders that have made an agreement together with a solicitor as to how we are going to operate. The corporation tax, none of that stuff will come into play until you set yourself up as a company.
Brilliant. Thanks, Kieran. There's a great question here, which is, I'm just going to go up to it now. What is the difference between not-for-profit and charity?
To be a charity, you actually have to be registered with the charities regulator. You have to fulfill certain, you have set up a specific set of purposes in your constitution that state that you are achieving charitable aims, usually through education, the advancement of education. Religion would be another one. Very often, if you think of lots of clubs and sporting organizations are set up as not-for-profits, but they're not registered as charities. So they exist to further their club, their sport, whatever the activity that they're in. They're not aiming to make a profit. That doesn't mean to say there isn't money there at the end of the year. I mean, I think in our world, we don't have the same perspective on what's regarded as profit, because we're managing incredibly tight businesses with really tight grant funding and stuff like that. You're not trying, if you're running as a not-for-profit, you're not trying to drill that down to zero. It is prudent that you have accumulated a little bit of money in terms of the operation of the business. But you are not generating profit. You don't have shareholders who could turn around and say, I want a chunk, do you know what I mean, of that money that's sitting in the bank account. I want a dividend or something like that from the money that's there. That's how you're set up in terms of a not-for-profit. The business is paying out the wages, like people are getting paid for it. But a lot of businesses, and this would have come up in terms of supports for businesses during COVID, where a lot of small businesses and sole traders, small limited companies, very common in Ireland, the business will operate for the year and the two directors may not necessarily be taking wages each month, but they will then do their tax return, their return with the accountant, and they'll be like, okay, there's this much money and we're going to pay the directors a dividend, and that will fund them towards the next year. It's a different way of thinking about things. You're generating profit, you're accumulating money with a view to extracting money at certain times. But that's the difference in terms of not-for-profit and charity. Charity, like I said, there's very specific things that you have to fulfill in order to get charitable status. And it's trickier to get than it used to. It's not impossible, but it's trickier to get than it used to be. And like I said, typically arts ones fall under the advancement of education.
And then following on from that, can a limited company with share capital be not-profit and get charitable status?
No. You're going to need to be a CLG. You're going to be company limited by a guarantee, not with shares and a value on it. And I will circulate something for everybody to get that difference, because it turns into a bit of a muddle. And the Companies Registration Act in 2014 brought in changes, and it brought in changes in terms of the abbreviation and stuff like that. But I will, when I'm circulating stuff, give you a very easy breakdown and some websites that give some good illustrations of the difference between those. But that's one of the key things. If you're just straight up limited and you have shares and you have that one-page constitution, you're a limited, you're LTD, you're not CLG.
Yeah. Returning again to the company name. So this is an interesting question. We might not be able to go into fully now, but what is the advantage of just registering a company name?
I suppose the advantage is that, you have it registered when you have written your Broadway hit and you turn around and you want to set yourself up in that way. If you feel you have something that you really want to make sure nobody else is going to get their hands on, you can go through that process. But I don't think it's absolutely necessary for everybody. It's very bespoke to where you're at and what your aims are. in terms of your artistic practice and how you're going to organize yourself for the next few years.
Yeah. Can you clarify that if you were paying your artists a fee rather than a wage, so rather than making them PAYE, do you still have to pay employers PRSI?
No, that's one of the differences. You don't. So if you're paying somebody a wage, you have an obligation to pay employers PRSI, and that is 11.5% now. Usually it can vary if it's slightly lower. That is a cost as an employer you are taking on top of what you're doing. If you're paying somebody a fee, they're looking after all of that themselves. And when they're doing their tax return for the 31st, they should be making a contribution towards their PRSI themselves out of that, but you're not responsible for that.
Okay. How does a collective work as a legal company?
I think this is not something that my understanding is that when people think of a collective, they think there's a different legal structure in place, but very often it's the partnership structure is the legal structure that people are operating under. And even if often you will find there is a group of 6 or 8 people working together, calling themselves something like that. They might be operating as a partnership and they might only have 2 or 3 people who are associated in the partnership agreement, but they have an understanding amongst themselves of how that works. It's important to note you can set up your partnership. You might have 3 or 4 of you involved in a partnership. You can change. You can go through a process and file forms to change who are the legal named partners. And I know of some people who operate like that. They might have a wider group and they're actually rotating who is going to be the named partners for the couple of years, you know?
Yeah. I might just make this the final question and then I'll put in ways to contact us in case there's something that wasn't covered. So what's the advantage of being an unincorporated association? So that's quite a specific question there.
Yeah. What is the advantage of being an unincorporated association? An unincorporated association, that would typically be a club. But again, you're back to personal liability. So it depends on how you're running things. I'm not sure. There might be an advantage in terms of running one particular project and you're saying you're not undertaking to do things over a considerable amount of time, but you do have obligations around AGMs, committees, the officials who run it. You have to have a chairperson, you have to have a secretary, you have to have a treasury. Typically in Ireland, you're really getting into like tennis clubs and golf clubs and a lot of organizations that would do that. And you set up a club constitution. I do know to have that. But, you know, in terms of the legal, I suppose you're not putting a big legal structure around yourself. But then that brings with it the question of if you're going to continue operating and if debts potentially are going to arise, you don't have any of that protection that you have if you set up a limited company.
There are a couple of quite specific questions. So Liza, I know you said that you had a specific, but I'll come back to you on that. I'm going to put in now. There was quite a good bit covered. Thank you so much, Claire. And as you said, we're going to circulate, you know, the leaflet that you have, which will have some further details that people can go down in terms of information about specific areas.
Yeah.
Just to say, because tax and quite a lot of revenue was covered within this, if there's any unfamiliarity, you might look back at the previous sessions that we had with Peter Daly. Even though those were about the pandemic unemployment payment, he did go into the fact that registering yourself on the My Account services on revenue.ie and some of the basic understanding of what the terms are. So it is quite useful. So I might share now where you can find all of our videos, including this one when it comes up again, because if you're like me, it'll maybe be a rewatch to catch some parts of it again.
Yeah, and what I discussed, and like I was quite broad strokes in terms of the tax and the obligations that I touched on there. If you have more details, Peter will have more detail in terms of being a sole trader or a partnership or stuff like that, and how best to manage that.
Yeah. So just thank you very, very much. Please do stay in touch with us. And thank you, Claire. Thank you, everybody, for joining us. And thank you, Claire. I might formally close now the recording, but we'll give ourselves a minute all to leave the room. We can do the Zoom leave where it's kind of a slow